Going over the IRS Interactive Tax Assistant tool that helps taxpayers determine whether or not they can deduct their charitable contributions. So this Interactive Tax Assistant tool, you'll need your filing status, yours and your spouse's, if applicable, your adjusted gross income amount, the amounts that you donated and to which organization that you donated them to. If you made non-cash contributions, then you would need any appraisal or other information that you have to determine the fair market value of that donation. And you need to know for each charitable organization whether or not they are qualified. If you need to verify that, you can use the tax-exempt organizational search tool that's on the IRS website. This interview doesn't cover business property or inventory, right to use property or partial interests, fractional interest in tangible personal property, any qualified conservation contributions, future interests in tangible personal property, or patents or other intellectual property. So it also is not designed for international taxpayers, such as non-resident aliens. So if that applies to you, you may need to refer to the international taxpayers section to walk through next steps. According to the website, this should take about 12 minutes. We'll walk through a couple of scenarios. Let's begin. So in the first part, we'll determine questions or determine your charitable contributions for the 2022, 2021, or 2020 tax year. At the time of this recording, the 2023 walkthrough is not available. So let's look at the closest tax year, which would be 2022. And the first question is whether or not you itemize deductions on Schedule A. So let's say no. Let's pretend that we're not going to itemize deductions. What would happen? So in this case, you would not be able to deduct your charitable contribution. So normally you must itemize your contributions to claim a charitable contribution on your tax return. For some taxpayers, you may recall a couple years ago that you were able to list a contribution of up to, I think, $100 as part of one of the tax laws that were influenced by the coronavirus pandemic. That was available whether or not even if you've claimed the standard deduction, but that was also a one-off. So that is not a current deduction for 2022 or the 2023 tax year. So let's say that we are itemizing deductions. So did you make the contribution either as an individual or a sole proprietorship? If you remember, it says this does not cover business situations. So this tool would not be able to answer that question for you. So let's go back and say that you did make that and that the contribution was made to or for the use of an organization. To qualify as a tax deduction, the recipient has to be an organization specifically that is tax exempt under the Internal Revenue Code. But let's see what happens if you select no. You're not able to claim a deduction, right? So let's say that it was made to an organization, and was it intended for a specific person other than a person in foster care or a student living in your home? Let's just say it was not. Let's select the country. We'll just assume that it was a U.S. Country. And was this a qualified organization as determined by the Internal Revenue Service? If you want to know what a qualified organization is, remember that anything that's highlighted in blue, you can click on it and get a little bit more information. So again, you can only deduct contributions if you make them to a qualified organization. So most organizations other than churches and governments may have to apply to the IRS to obtain a tax exempt status or to be considered qualified. So most organizations know whether or not they meet that criteria. So let's just say that the recipient of our contribution is a qualified organization. Let's just say that we made a cash contribution. We can go back and revisit non-cash contributions at a different point. So what type of cash contribution did you make? Did you make a QCD from an IRA? Did you actually give cash? Did you provide out-of-pocket expenses? So some of these are deductible. I'll tell you right now, the value of your time and services is not deductible, even if you're a doctor and you provided, say, medical care in support of Doctors Without Borders. That would not be considered a deductible contribution. Let's go ahead and select that and just see what this says. See, you're not able to claim a deduction. So let's just say that you wrote straight cash. And then was it a donation made to a state or a local government that resulted in a tax credit? Generally speaking, you can't take a tax deduction and claim a tax credit. So we'll go ahead and skip that one because I think we can kind of intuit the answer. Was it made to a college or a university? Let's say yes. Did the donation give you the right to buy tickets to an athletic event? Let's say no. It was just a straight contribution. And let's just say it was $5,000. So did you receive or expect to receive a benefit from the contribution? Let's just say, what is your adjusted gross income? We'll call it $100,000. So you are able to claim a deduction. You would claim it on Schedule A of your tax return, and then there's additional notes. So you have to take the deduction on the tax return for the year in which you made the contribution. Your charitable deduction is limited to 60% of your adjusted gross income based on the $100,000 in AGI that I put in there. That would be $60,000. You can carry over any qualified contributions that you're not able to deduct in the current year, and you can deduct the excess in each of the next 5 years until it's used up, but that is the deadline. So let's go back and let's imagine that you made a non-cash contribution. So non-cash property. Oh, it looks like I might have to refresh this page. So bear with me for a second. Sometimes if you don't refresh, then it repeats questions that might not be pertinent to your example right here. So this is the home page for that. We're going to go to the charitable contributions section. Let's go ahead and continue this. Please bear with me. So now we're back at the home screen. So let's imagine that we made a non-cash property contribution. So now it's going to ask you what type of property did you donate. Let's say we donated a used car. You can definitely, drop down any of these items, but sometimes people donate a car when they no longer have a personal use for them and they'd like to get a tax deduction. Was it made to a state or local government? Let's say no. What did the organization do with the car? So they sold it, they used it, they made material improvements, and then they sold it. Let's say that they used it. And then what's the fair market value of the property? Let's just say it was $5,000 on the date of the contribution. So if you want to know more about fair market value. It's the price at which property would change hands between a willing buyer and a willing seller, where both parties neither have to buy or sell, and both parties have reasonable knowledge of all the relevant facts. What would the fair market value be in that transaction? Let's say it's $5,000. What's your basis in the property? Your basis generally is how much you paid for it. So let's say we paid $25,000 for this car. And was the donated property subject to a debt? No, it was completely paid off. Do we expect to receive a benefit? What's your adjusted gross income? Let's say it was $100,000. And then does the total amount of your estimated charitable contributions exceed $20,000? Let's say it does not. So in this case, you would be eligible to claim a deduction on Schedule A. Since the organization used the vehicle, you can deduct the fair market value at the time of the contribution. And notice that in this case, you are limited to 50% of your adjusted gross income, not 60%. So you would complete IRS Form 8283, non-cash charitable contributions. The organization would complete IRS Form 1098-C, which you should expect to receive. This is the form that reports contributions of motor vehicles, boats, and airplanes. So you would attach both of these items to your income tax return, and you would itemize this as well as other itemized deductions on Schedule A. So what would happen if instead of using the car, the organization decided to turn around and sell it? Yeah. Let's say they gave it to a needy person. All other facts remain the same. You would still be able to deduct it. You would still follow the steps outlined. You can deduct the fair market value at the time of the contribution. And one last thing, let's see whether or not things change if the organization turned around and sold it. So you determined the fair market value was $5,000. Let's say that they reported $6,000 as the gross proceeds of the sale. Your basis was $25,000. Did you obtain a Form 1098-C? Let's imagine you didn't, but it was paid off. You didn't receive a benefit. All else remains the same. You're not eligible to claim a deduction because you did not obtain Form 1098-C. So let's go back and just pretend that we did receive Form 1098-C. So in that case, you would claim a deduction. You would deduct $5,000 because that was your reported fair market value. Even though the organization turned around and sold it for $6,000, you can only deduct $5,000. Finally, one last scenario. We're going to now say that they turned around and sold it for $3,000. What would happen in this situation if all other facts remain the same? So in this case, they sold the vehicle for $3,000, so you can only deduct up to $3,000. So again, that's subject to a 50% limitation on your AGI, which you can carry over any deductions that you can't, any contributions you can't deduct in the current year for up to 5 years. You will complete Form 8283, and since you said that you reported or that you received Form 1098-C, you would have to attach that to your tax return. You would also have to keep a written receipt saying that the name, date, location of the contribution, and this is all information right here, the acknowledgement of contribution. This is all information that you would find on your Form 1098-C. So you would you have to have it either before you file your tax return or the due date of your tax return. And then you also have to keep this in your records. So one last thing I'd like to point out to people is if you're going to use this to determine whether or not a big ticket item is eligible to be itemized, I would print out this review screen, which you can do right there on the print screen button. And then I would go through it with a fine-tooth comb, make sure that the facts are the way that you presented them. And if they're not, go back and make any adjustments that you need to. And once you're finally happy with the walkthrough, then keep a copy of this in your records. And in this case, if you made multiple contributions, you would do this for each big ticket item. So that way, if you're ever audited, you can refer to this and walk through the conversation with your examiner on what you believe to be the due diligence and the good faith effort, and you would use this as documentation. So if you make a mistake, the IRS is fairly forgiving. They're going to still impose, the difference in the tax liability plus any accrued interest. But if you don't have records and it just appears that you arbitrarily started throwing numbers around, then you could be subject to accuracy related penalties or negligence related penalties. So the more accurate you keep your records, the more forgiving the examiner may be if they do uncover a mistake. So you will pay any corrected tax amounts, but it's a lot better to pay the tax as opposed to paying penalties on top of the tax. So we do cover some of these items, such as Schedule A, IRS Form 8283, and Form 1098C. We do have articles and videos that go over each of those. So we'll put links to all of those articles and videos in our show notes, and you can read those. So if you are interested, please check out our articles. They break down each of those forms in more detail, and check out the other videos. And if you do like our articles, please subscribe to our newsletter. If you like our videos, please subscribe to our YouTube channel. And if you have any questions, comments, or observations, as always, please post them in the comments section, and I'll do my best to get a researched answer back to you. Thank you very much and have a great day.